All right, so in this video, I'm going to be talking about how to draw up your key levels of structure, your zones, and most importantly, pricing. So Forex is all about numbers. It's all about price. All Forex is the currency pairs are moving from one price to another. Okay, and you'll find that Forex actually respects certain price points very, very well. So what the numbers are you're going to be focusing on are these ones here. So you have your 200, 500, 800. And 1000. So an example of the 200 level would be like 1. So right here, this line here, 1.22200. Another example would be for the 500 would be this level down here, 1.20500, which you can see right here. Another level would be, or for example, 1.20800, and then 1.21 would be the 1000 level. So those are just some examples there. So price is pretty much going to move from your 200, your 500, your 800 to your 1000 levels. Now, price isn't always going to bounce off these levels exactly. So when price isn't near these levels, what you want to do is you want to actually make sure you're rounding off your zones. And I'm gonna give examples of these later. But you want to always make sure you're rounding off your levels of structure. So you're 25, 50, 75, 100, 125, 150, 175, 200, etc. So again, you only want to be rounding to these when price isn't near these levels, which I'll give examples of. But right now, so what I've done is I've just put some random lines on the chart, okay? And I've rounded them off to your 200, your 500, your 800, and your 1000 levels, just to show you how well price moves from these numbers and how well it respects them. So you can see here 1.22200 levels. That's the 200 level up here that I'm talking about. So you can see price tested here, broke back below, tested here, came after all this price action, came back up and tested and closed below, respected here. Again, tested here, kind of faked out, tested again. Another example down here, 1.21800. Again, that 800 level. You can see price tested here, tested as resistance, broke above, tested as support, broke below, tested here, tested, faked out, broke below, tested here, again tested here, broke above, and then tested as support. Now sometimes price will kind of move slightly above and below these numbers. This is called slippage, whatever you want to call it. It's a fake out. It is still respecting that, because if you look in the higher time frames, these would be wicks. What matters is how prices move from these zones to zones. Okay, again, that's why it's zones or levels of structure, whatever you want to call it. It's not a specific, price doesn't just stop at one point. Okay, so your zones are going to give you sort of a strike zone, sort of an entry zone, if you want to call it, to where you're going to be monitoring price to look for that particular buy or sell. So another example is down here. The next one, we have 1.21. You can see price broke above, tested, sort of faked out here, came back up and tested again, broke below, came back up, tested. You can see how well it's respecting this level. Broke below, came back up, tested as resistance, and then broke back below, tested as resistance here, and then broke back above. We'll do another one down here, 1.20200. Again, after all this big move down, what did it do? It found support, respected, broke below, broke back above here, tested as support, tested again, a little bit of slippage. Again, you're going to be focusing, as I show you guys how to draw these on, focusing on more of a zone than just a singular point in the market. Again, broke above, tested, and so on. So we'll do another one down the very, very bottom here. We'll do this one here, 1.19200. This level here, you can see we tested perfectly to the pip, broke back above, tested as support, go across, we broke below, tested here. Let me zoom in for you guys. Broke below, tested here, broke back above, tested, broke back below, tested, and then so on, and then over here as well, tested, and so on. So you can see how well price is respecting these points. So again, these are the numbers you'll be focusing on. So what we're going to do now is we're going to go on the higher time frames, and we're going to draw these levels up, okay? So again, this is just an example of how to mark up your levels. So if you've already watched the line chart video, you'll understand how we do this. So I'm just going to clear everything off for you guys. We're going to start from scratch, okay? So what we're going to do, let's figure out where we want to start from. All right, we're going to start from, clear it off over here. Again, you're going to go to your line chart, and we want to mark up your lines, okay? Mark up your levels of structure. So obviously you have a level here, so I have a level here. Now I was going to focus on sort of relevant price, because obviously if we put it down here, I know price doesn't test here, but I'll just show examples. Here, You can see we have obviously resistance, 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 resistance. We broke back up and tested as support. Through here, resistance, significant reversal point in the market, resistance, resistance, broke back up, tested as support, broke below, tested as resistance, broke back above, came back and tested as support. Notice I'm only looking over here. You don't really need to look all the way over here unless there's no price action here to look left up on, okay? And then here as well. And then obviously there is also, you can see how this sort of respected here, but I'm just gonna mark this, okay? So what we're going to do is we're just going to practice drawing our levels up, okay? So I'm just going to focus, I don't need this one too much, it's kind of too far away. Let's just focus on this, okay? So we'll start off with this one. So what you want to do is you want to take it from the body close, you want to take your horizontal ray, and you want to take it right down to the body, you want to round it, okay? So again, you want to round it up. So 88 goes to 400, okay? You don't want it cutting through the bodies. Now it's going to sometimes cut through a little bit, but that's okay. And then what you want to do is you then want to take the average of the wicks, so in this case this wick here, and you want to round this off. So 475, let's try 500. Again, that quarter price number, and this is 400 here. And you can see how price broke above, tested, 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 and you would have taken an entry in this zone here, okay? Next one, next example here is, actually let me do this. I want to round this off. Again, so when you have multiple points where it tests, so tested here, tested here, tested here, you want to make sure you're not cutting through the bodies, okay? So drag it up towards not cutting through the bodies. So in this case 860, so let's try 850. Make that a little bit better. Let's try 875, which is a 2.5 pip difference. See how it's not cutting through the bodies? So what you want to do is take it from the average of the wicks, and you want to take it to the bodies, okay? Again, so 900, and then 875 is what we had it at, right? Perfect. So what you would have seen here is, let me probably make this a little bit bigger, given that it's 1,000 levels very, very close. Again, average of these wicks as well. Let's have a look, 950 maybe. You can see how price, let me get rid of this. You can see how price respected, actually that 950, what's that right next to you guys? It's right next to 1.2. Again, whenever that 1,000 level or those quarter price numbers are very, very close by, within maybe 5-10 pips, you always want to make sure you're rounding them up. So you can see price broke above, tested, made like a double bottom, you would have taken a buy right in there. Same thing when it broke back above here and came back down, tested, it respected structure, meaning it did not close below. It closed above or inside the level of structure is where you would take your buy, okay? So for example, if this came down and closed below, you wouldn't have been looking for buys, you would have been looking for sells, but the fact it closed below the exhaustion wicks show rejection, you've been looking for buys, and same thing here, okay? So next one is here. Now this is a good example because you can see price, even though we put the line right here, it's going to cut through these candles, which is fine. It's never going to be perfect. Sometimes it will, but what you want to make sure is you're not cutting through, you know, a lot. You want to make sure you're reducing it as much as you possibly can to where it makes sense. So let's have a look. 20700 maybe. So respected here, respected, faked out, closed back above, respected, and you see kind of toyed around over here. Regardless though, it's still quite clean. Let's see if we can maybe make it a little bit better. Because I'm looking at these bodies here and these bodies, these bodies, and these bodies. Let's see if we can round this up. 650. So here you can see tested. These candles also close below. So this makes sense, okay? So what you would do is you would take it from here, and then you would take it based on the average of the body closures and the wicks. So body closures meaning this body closure, these sort of wicks, these body closures, and wicks. All right, so what you want to do is let's see what 700 looks like. Boom, perfect. So you can see we broke above, faked out, closed below, closed back above, tested. So you would have taken a buy there, taking it up, closed back below. So when price is below a level of structure, what are you doing? You're looking for sells. Respected by closing below or closing within the zone. So therefore you were looking for sells. You would have taken it down here, taken the buy up, and then you would have been looking for this to break above, come back, retest, and because this respected this level, it faked out, closed back above, exhaustion candles, you've been looking for the buy, and you would have taken a buy up. So another example of this one up here, you want to take this line here, and you want to round it off, so 400, see how that closes below the body, so you want to round it up, 425. Again, average of the wicks, and body closures if there are any. So 425 to 500, that quarter price. You see price came back above, tested, found support, broke back below, tested, made a double top. Again, you can see here a significant reversal point that we marked. So you would have marked this up 725. Again, you want to take the average of the wicks to say, again, that quarter price, 800, right? 725. We're rounding everything off. And because of that 800 quarter price that I talked about, so you can see we actually came up, made a double top here, which again, you guys will learn patterns such as double tops, M's, W's, etc. Later on. Right now, you're just understanding how to mark up your levels of structure. And you'll see that because price broke here, what does it have to do? Come down and retest. So you'll come down, you would have taken your sell based on this, respecting price, and then forming the pattern, and you would have taken down to here, you would have taken the buy up. And then same thing here. What happened? Price broke above, tested here, you could have taken a buy. Price then broke above here, tested here, and then you could have taken a buy. So all price is doing, guys, is literally just moving from price point to price point, from the 200 to the 500, the 800, the 1,000, etc., like so. And then it pulls back, it tests, pulls back, test, test, break above, test, break above, test. All price is doing. You see how it's just sort of trending very, very nicely between, and all it's doing is moving from here. We have 500 to the 800 to another, what is this? Another sort of 800 level, up here to the 500 level, back down here to the 1,000 level, etc., etc., etc. So again, guys, just one last time, you make sure you're focusing on price. Make sure you're rounding off each level between the 200, the 500, the 800, the 1,000 level. And if you cannot round to these levels, if price isn't actually near these levels of price, then what you want to do is focus on 25, 50, 75, 100, 125, etc., etc. And you want to make sure that you're not cutting through the bodies as much as you can. Obviously, as I said, sometimes there's going to be examples such as this one where it's going to do a little bit, but you can see how it makes sense. Okay, you want to take the average of the wicks always, and if there's a case like this one here where the bodies are kind of messy, that's when you want to kind of take the average of the body closures along with the average of the wick. So I'll explain this one more time. So we have this body closure here, body closure here, body closures here and here and here, and you can see how just by refining to this body closure here, and obviously we rounded it, right? So we made it to 700. That's why it's a little bit higher, because you always want to make sure you're rounding. You can see how price respected this so nicely. Okay, I'll have more examples of this in the following videos, but this is just more of an introduction. And pretty much, guys, in every video I make, pay attention to how I mark the levels and how I drop up your key levels of structure, because everything is rounded. It's all done, right here in front of you, so you can go back and do it yourself by looking at the same dates that I've done it on. So this one, for example, was all done during 1st of April to the 20th of May 2021. So after watching this video, go back test this, open up, rewind price to 1st of April and mark off May 2021. Go to your line chart and mark up your key levels of structure, and then round off your zones, and you'll see how yours will begin to match mine. And it just comes to practice. Over time, everything will just become easier and more refined. Everything in Forex and for everything about life is just about practice, practice, practice. Practice does make perfect, okay?